Your insurance broker is not paid by you, and that changes the advice you receive. You call them when you need coverage. They handle your renewals. They answer your questions. But your broker is usually paid by the insurer whose policy you buy, and that creates incentives most homeowners never see. I've spent nearly a decade reviewing files that come through the broker channel, and I've seen how commission structures can affect what homeowners are shown, what they pay, and whether their renewal is actually shopped. 3 things: volume bonus thresholds, preferred insurer placement, and the renewal trap. And the third one, the renewal trap, is the one that can cost homeowners thousands of dollars without them noticing. By the end of this video, you'll know exactly how the broker incentive structure works, what it means for your premium, and the 5 questions to ask your broker before your next renewal. Let's get into it. Here is what most homeowners do not understand about how the brokerage model works. A broker is not simply your personal shopper for insurance. They are an intermediary. They access multiple insurance companies on your behalf. They present you with options, and they earn a commission from the insurer whose policy you purchase. That commission structure is how the broker runs their business. It is not inherently wrong. The problem is not that brokers earn commissions. The problem is what happens when the commission structure creates incentives that run against the homeowner's interest. And there are 3 specific ways that happens. The first is subtle, the second is structural, and the third one, the renewal trap, is the reason homeowners who stay with the same broker for years often end up paying significantly more than new customers at the same insurer. Here is how each one works. Conflict 1. The volume bonus threshold. Many brokerages have preferred relationships with 3 to 5 insurers. Those insurers may offer the broker bonus commissions, sometimes called contingency commissions or volume bonuses, if the brokerage sends them a certain volume of business each year. Here is how this affects you. A broker who is approaching a volume threshold with insurer A has a financial incentive to steer the next homeowner toward insurer A, even if insurer B offers a better rate for that homeowner's specific risk profile. The homeowner sees a quote. They do not see who wasn't quoted or the commission structures behind the quotes they did receive. This does not mean your broker made the wrong recommendation. It means you have no way to verify they made the right one. The protection. Ask your broker directly which insurers they are quoting and why. Ask if they have any volume bonus arrangements with those insurers. A good broker will answer this question without hesitation. A broker who becomes evasive is giving you information. Conflict 2. Preferred insurer placement. Beyond volume bonuses, some brokers have placement agreements with specific insurers. The insurer guarantees the broker a certain commission rate or access to products not available through other channels in exchange for a guaranteed flow of business. These arrangements are legal and disclosed to the regulator. They are not disclosed to you. What this means in practice, some brokers have 2 categories of insurers, preferred and non-preferred. Preferred insurers get quoted first and quoted often. Non-preferred insurers may not get quoted at all, even if they would offer a better rate for your specific property. The homeowner who shops through a broker assumes they are getting a full market comparison. They are getting a comparison of the insurers that broker has relationships with. That is a smaller universe than the full Canadian home insurance market. The protection. Run one independent comparison through a rate comparison website. The link is in the description. Alongside your broker quote, you are not replacing the broker. You are giving yourself a benchmark to evaluate what the broker brings back. Now, the third conflict is the one I have seen cost homeowners the most. It works slowly, invisibly, and by the time most homeowners notice, they've overpaid for years. Conflict 3. The renewal trap. This is the one that costs homeowners the most over time, and it is the most invisible. When you are a new customer at an insurer, you are a competitive acquisition. The insurer prices your first-year premium aggressively because they want your business. They assume you are shopping around. After year 1, the insurer's model shifts. You are now a retained customer. The insurer knows from industry-wide data that most customers who renewed once will renew again. The premium can increase annually without triggering a shopping event. Your broker knows this too. And here is where the renewal trap closes. The broker earns a renewal commission every year you stay with the same insurer. That commission is typically lower than the original placement commission, but it is passive. Zero work. Just the renewal arriving. A broker who actively shops your renewal every year, who goes back to market and gets competing quotes, might find you a better deal. But shopping your renewal takes time. It might result in you moving to a different insurer. And if you move, the broker loses the renewal commission from the old insurer and earns only the new placement commission. The result? Homeowners who stay with the same broker and the same insurer for 5 or more years can end up paying significantly more than a new customer would pay for the same coverage, depending on how actively their broker shops the renewal. The gap compounds annually. I have reviewed files where the gap between the long-term customer premium and the new customer rate for the same property was 30 to 40%. The homeowner had no idea. The broker had not flagged it. The renewal kept processing automatically. Your broker is not your adversary. Most brokers are professionals who provide real value. Access to multiple markets, claims advocacy, coverage expertise. The incentive conflicts I've described are structural, not personal. Your broker is not working against you, but they are not exclusively working for you either. The homeowners who get the best outcomes from the broker relationship are the ones who show up informed. They ask specific questions, they run independent comparisons, and they trigger a shopping event at every renewal, not by switching, but by asking their broker to go back to market. 5 questions. Ask these before your next renewal. Question 1. How many insurers are you quoting for my renewal? And which ones? You are not asking them to justify their process. You are establishing that you are paying attention. A broker who knows you will ask this question is more likely to run a genuine comparison. Question 2. Do you have any volume bonus or contingency arrangements with the insurers you are quoting? This question is legal, reasonable, and directly relevant to evaluating their recommendations. The answer will not always result in a different outcome, but the answer tells you something about the relationship. Question 3. What would a new customer pay for the same coverage at my current insurer? This is the renewal trap question. Some brokers will not know the answer off the top of their head, but they can find out. If the new customer rate is significantly lower than your renewal rate, that gap is information you can use. Question 4. Has anything changed in my coverage or exclusions since last renewal? Policies get quietly updated at renewal. Coverage limits, exclusions, deductibles, any of these can change without a phone call. Ask specifically. Question 5. Are there any discounts I am not currently receiving that I may be eligible for? Claims-free discounts, bundling discounts, loyalty discounts that were never applied. These exist at most insurers and are not automatically applied at renewal. You have to ask. Ask the 5 questions. Run an independent comparison at every renewal. Know what new customers at your insurer are paying. And treat your home insurance renewal as an annual review, not an automatic transaction. I've put a link in the description to compare home insurance rates from multiple Canadian providers directly, without going through a broker. It takes about 3 minutes, and it gives you the benchmark number your broker should be beating. If you found this useful, subscribe. I publish one of these every week. Everything I cover comes from nearly a decade of working inside the Canadian insurance industry. I've covered how insurers price your premium, when to file a claim, how non-renewals work, the 6 property risk factors, what happens when you switch providers, and how your credit score affects your premium. All linked at the end of this video. See you next week.